Thank you very much for being here, staff. Close the door there. I appreciate it. Good afternoon. I'm Dennis Kucinich, Chairman of the Domestic Policy Subcommittee of the Committee of Oversight and Government Reform. Welcome to today's hearing on foreclosures, what needs to change in the administration's response. Today's hearing is a continuation of the subcommittee's series of hearings examining the characteristics of the ongoing residential foreclosure crisis and the impact of the administration's response. Now, without objection, the Chair and the Ranking Minority Member will have 5 minutes to make opening statements, followed by opening statements not to exceed 3 minutes by any other member who seeks recognition. And without objection, members and witnesses may have 5 legislative days to submit a written statement or extraneous materials for the record. I want to acknowledge the presence of my colleague from Ohio, Congressman Turner from the Dayton area. Welcome. I appreciate you being here. I know that you have another hearing to go to, and we're going to move through the opening statements and give you a chance to be heard from as well. So, did you have that letter? Okay. This subcommittee began holding hearings on the subject of the foreclosure crisis and solutions to it 3 years ago. Since that time, we've met 9 times on the subject. It's not hyperbole to say that this is the worst economic crisis to hit America since the Great Depression. The fallout from the crash in the housing market and the recession that has overtaken our country has left no community in the country untouched. Nearly every level of economic activity has been affected negatively. Nationally, the unemployment rate is approximately 10%, and in some states it's nearly 15%. Foreclosures continue. 2.9 million borrowers received foreclosure notices in 2009, and it's predicted nearly 2.5 million more borrowers will lose their homes to foreclosure this year. According to the most recent data, more than 15%, 1 in 6 of all mortgages are in trouble. 2.6 million borrowers have missed at least 3 payments on their mortgages, making them seriously delinquent. This is double the level of 1 year ago and is the highest number of delinquencies on record since 1972, according to the Mortgage Bankers Association. Now, let's be clear. This foreclosure crisis started well before the current administration came into office. But like the Great Depression, the administration that inherited the crisis will be judged for how they respond. And that judgment can be as harsh as if they had created the crisis themselves. The American people expect, and the American people deserve, bold initiatives from their government to help as many people as possible. Unfortunately, in my opinion, much time has been wasted by relying on lenders and investors to choose to modify loans and keep people in their homes. Indeed, even as this administration quickly created a program that the previous one wouldn't even consider, the Making Home Affordable program, it continued to rely on the charitable impulses of the industry that has nearly bankrupted the nation. But the industry that received a $1 trillion bailout has been unwilling to absorb the losses, to write down bad debts, and their recalcitrance is holding up the resolution of the foreclosure crisis. Thus, the administration's centerpiece loan modification program, known as the Home Affordable Modification Program, or HAMP, has not lived up to its high expectations. Treasury points out that 75% of the 1 million or so borrowers who have been offered modifications under the program are making their payments. And it's just a matter of borrowers getting all their documents to lenders. And certainly for a program that is just under a year since its creation, the efforts to publicize it and encourage participation are laudable, but it's also severely flawed. It doesn't address one of the key problems facing borrowers, the problem of negative equity, of a house that is worth less than the mortgage. It is marred by geographical disparities, and its affordability objectives rely upon stretching out the payments, an approach that can saddle the borrower with more debt, not less, and which makes sense only on the assumption that home values are eventually going to go right back up. Now, on Friday, this administration announced a pilot initiative to distribute $1.5 billion in TARP money to 5 states. That list did not include Ohio or other states that were hit harder and earlier by the foreclosure crisis. Even if Ohio had been included in that list, it would not have been enough to make a meaningful headway in the crisis. In fact, the state set a record for foreclosures last year, the 14th year in a row of increases. But as we will hear today, no matter how grim the statistics are, there are still plenty of people in Ohio and in many other states that are hoping and waiting for some relief. Americans will be able to tell if Washington is faking it. Millions of people will have personal knowledge of whether or not the government gave them real help, which for many borrowers must necessarily include principal reduction. There is still time in Ohio and in communities across America to create a positive and fruitful legacy of this administration's response to the foreclosure crisis. My hope is that this administration feels the urgency and the need to make this decisive difference. I want to, in addition to acknowledging our first witness, Ms. Caldwell, I also want to acknowledge the presence in the audience of the Treasurer of Cuyahoga County, Ohio, Jim Rokakis, who has been a stalwart in not just examining this, but this matter of the impact of foreclosures, but has really been a leader nationally in suggesting solutions and the way forward. So, Treasurer Rokakis, I appreciate your presence here today. We also have a local TV reporter, Bill Shields, who actually did an investigation that we're going to give this committee a quick glimpse of in the same panel a little bit later that Mr. Rokakis is on. So welcome to Washington. I'm going to proceed right now to the opening statement from our ranking member, Congressman Jordan of Ohio. You may proceed.
Thank you, Mr. Chairman. Let me, too, thank Mr. Rokakis for being with us, and Ms. Caldwell. I know they were both there in Cleveland when we had the field hearing a few months back. Mr. Chairman, we do appreciate this hearing today. Homeowners across the country are suffering. Just last week, the Mortgage Bankers Association reported that the combination of loans in foreclosure and one payment behind in their mortgage was over 15%, highest in the history of the survey. Meanwhile, home prices keep falling. U.S. banks are posting their sharpest declines in lending since 1942. At the recent field hearings of this subcommittee in Atlanta and Cleveland, we have received overwhelming evidence of the failure of the administration's policies and programs to stem the tide of mortgage defaults and foreclosures. In addition to trade organizations, think tanks, and government accountability groups have produced reams of reports that demonstrate how the administration's most active program, HAMP, has not only failed to accomplish the administration's promise of assisting 3 to 4 million American homeowners, but is actually harming homeowners and the broader economy. This harm, Mr. Chairman, can be measured in several ways. First, the administration's mortgage modification efforts are costing taxpayers as much as $75 billion. Since the President took office, he has told the American people time and again that the answer to our economic problems is more government spending and new government programs. And time and again, this administration has told the American people that they should expect a return on their investments through bailouts and stimulus spending. And they have been told that they will be able to track this return through an unprecedented level of transparency and accountability. But once again, the administration is breaking these promises to the American people. In the face of widespread bipartisan criticism of HAMP, for example, the Treasury Department has retreated into secrecy by halting the dissemination of information on the program's website that would allow the public to track the program's success rate. The public is also harmed when the government spends their money on failed programs. It is doubly harmed when the government tries to disguise its failures by hiding information from the American people. We've also learned that many of the people who have received temporary assistance through the administration's programs are now discovering they are ineligible for the long-term mortgage modification. As the New York Times recently reported, this means that many Americans are throwing their money into homes that they believe the government would help them keep, only to find out thousands of dollars later that they will face foreclosure anyway. Delaying foreclosures, Mr. Chairman, does not help the many Americans who are fighting to keep their jobs or find new ones. Delayed foreclosures only serve to prolong the economic hardship, drain them of much-needed resources, and defraud them the opportunities to find more affordable housing options. In fact, it seems that the only good thing that the administration's efforts have accomplished is to reinforce in the minds of the American people the reality that technocratic tinkering is not an effective solution to our economic problems. The only viable long-term solution is to keep more Americans in their homes and in their jobs. For that matter, it is a broad-based economic recovery built on the foundation of free markets, fiscal responsibility, and limited government that has made our nation strong and prosperous for more than 200 years. Mr. Chairman, I would also ask unanimous consent to enter into the record a staff report that was released this morning along with Ranking Member of the full committee, Mr. Issa, the title of which is Treasury Department's Mortgage Modification Programs, a Failure Prolonging the Economic Crisis.
So ordered.
Thank you.
Without objection.
Yield back.
Chair recognizes Mr. Cummings from Maryland.
Thank you very much, Mr. Chairman. Mr. Chairman, I thank you for holding this hearing. In my 14 years in Congress, I've devoted more energy to addressing the current foreclosure crisis than almost any other issue facing our nation. Because of that, I thank you for holding this hearing, as well as the field hearings in Atlanta, Cleveland, and for using the Domestic Policy Subcommittee to shine a light on this very tragic problem. I also thank all of today's witnesses for joining us. Your input is crucial to our developing real solutions for real people who are suffering real problems. More than a year ago, I decided that we were not doing enough to address foreclosures in my district in Baltimore. So I hired someone in my district office to work only on helping our constituents keep their houses. Most of us only have 20 employees. That's between Washington and the district. And I then soon discovered I needed another one. So literally 10% of my staff only deal with foreclosures, keeping people in their houses. After I hired the first one, I decided that there was still more that we could do. We figured out that the most common barriers to mortgage modifications were lost paperwork, understaffed lender call centers, and lender and servicer denials without any explanation. And another one was just the idea that sometimes when they got a hold of the lender just simply did not take the time to work with the borrower. And I want to say that it was not always in a good faith manner, but I won't go that far. But one thing that we did discover is that once my staff member would sit down a lot of times and go over the paperwork with the borrower, we discovered that, I'd say about 80% of those cases, they were able to get a modification. So this past Saturday, we held our third foreclosure prevention workshop in Baltimore. Over the last year, these events have brought together some 3,000 people from my district, and by the way, from all over the country. We had over 25 lenders and created the opportunity to keep hundreds, if not thousands, of families in their homes. We discovered that something as simple as a face-to-face meeting, this is not rocket scientist stuff, a face-to-face meeting does not seem that important, but for the men and women who approached me on Saturday, literally in tears after negotiating modification, it meant everything. But there are others for whom the options are severely limited. They're unemployed. We can do a lot of good with President Obama's mortgage modification infrastructure. I watched it happen on Saturday in Baltimore, but the plight of 14.8 million unemployed Americans demand that we do even more. And more is these three things. First, we need mortgage assistance, whether through grants or loans, for unemployed persons while they continue to look for work. We managed to get $3 billion in the Wall Street Reform and Consumer Protection Act, but that funding is far from a done deal. I was pleased that the President's recently announced 4HM program, Help for the Hardest Hit Housing Markets, will include assistance to the unemployed, as well as those who are underwater in their mortgages. While I would have hoped to see the program implemented in more than just the 5 hardest hit housing markets, we have to start somewhere. The second thing we need to do is we need a real jobs package. Senate's passage yesterday of the $15 billion so-called jobs bill is better than nothing, but it is not nearly enough, and it's anticipated we'll move on that in the House this week. Finally, we need job training programs that allow workers to adapt and improve. As CBO Director Douglas Elmendorf said on Tuesday to another committee, which I sit on, the Joint Economic Committee, so many of the lost jobs simply are not coming back. New jobs will come from new firms who embrace new technology and innovation. Worker training, whether through community college, career centers, or traditional four-year schools, must be part of the long-term solution. Clearly, we need a comprehensive strategy to help the unemployed, one that should include the elements I just mentioned, but today's task, foreclosure prevention, is the first and biggest element of that solution. And so, Mr. Chairman, I look forward to the testimony, and I want to thank the witnesses. And with that, I yield back.
Chair recognizes Mr. Turner of Ohio.
Thank you, Chairman Kucinich. I want to thank you for your leadership and efforts in the areas of the mortgage foreclosure crisis and also the issues of how you've looked to protect families who are in Ohio as we struggle with how to address the issue of the mortgage foreclosure crisis and its effects on our neighborhoods. I want to thank you and the ranking member for holding this hearing today to focus on the effectiveness of the administration's Home Affordable Modification Program in helping struggling families facing foreclosure and stay in their homes. My congressional district, as well as the entire state of Ohio, has been significantly impacted by the current foreclosure crisis. In the counties located within Ohio's congressional 3rd District, there have been over 6,000 housing foreclosures reported in 2008 alone. While Congress has made attempts to address the root causes of the housing crisis, we need to continue to improve federal housing policies in order to find new solutions to address these challenges. We must conduct a comprehensive reevaluation of our federal, state, and local housing policies in order to stabilize the housing market, keep people in their homes, and help displaced families return to their homes. To better understand how the greater Dayton area has been particularly affected by the current housing crisis, in August, I convened a forum in coordination with the Northeast Midwest Institute, consisting of 2 panels to examine the impact of the housing crisis on our community and to discuss the federal response. The Northeast Midwest Institute is a Washington, D.C.-based nonprofit, nonpartisan research organization dedicated to economic vitality, environmental quality, and regional quality for Northeast and Midwest states. The first panel was composed of Miami Valley leaders who discussed the effects of the housing crisis in the region. We have in attendance today Jim McCarthy, who's in the back of the room, from the Miami Valley Fair Housing Center, who's previously testified before this committee on the issues of the effects in Miami Valley. The second panel was composed of federal policy experts who discussed the federal response to this crisis. Both panels highlighted recent successes and identified some of the serious challenges we face as we continue to determine the appropriate role of federal government in addressing the housing issues in our region. The panelists also provided considerations that address the current legal and regulatory framework governing the housing and mortgage lending markets, the prevalence of fraudulent mortgage lending practices, the effectiveness of certain housing tax credits, grants, and programs, as well as providing a complete reevaluation of federal housing policies and their impact on communities across the nation. Today, I present the report that summarizes a number of the policy considerations based on the individual testimonies and discussions held at the Housing Forum that may assist us in helping families stay in their homes and stabilize our neighborhoods. The report, entitled The Impact of the Housing Crisis on Local Communities and Federal Response, discusses preventing predatory lending by increasing financial product transparency and preventing the issuance of inappropriate loan products, streamlining the mortgage servicing industry, standardizing housing counseling and loan modification regulations, improving the neighborhood stabilization program, and building local organizational capacity in distressed communities, and rethinking the impact of low-income housing tax credits on older cities. The report also provides Congress, government officials, and the housing industry with a thorough understanding of the implications of federal housing policies' effects on cities like Dayton. With that, I would like to offer the report, without objection, for the record. Thank you, Mr. Chairman. Mr. Chairman, I thank you for your support for that, and I also thank you for your advocacy on behalf of Ohio within this program that's the subject matter of this hearing. Thank you.
I thank the gentleman, and I thank you for the opportunity to work with you on this, and also my other colleagues from on this committee. We are now going to hear testimony from the witnesses. I would like to Statements from members of Congress, and the subcommittee is going to receive testimony from a witness of the first panel. Ms. Phyllis Caldwell is the Chief of the Office of Home Ownership Preservation at the U.S. Department of Treasury. Ms. Caldwell oversees management of the Obama administration's Making Home Affordable program. Previously, Ms. Caldwell was president of the Washington Area's Women's Foundation, a public foundation solely focused on improving the lives of women and girls by fostering philanthropic giving in the Washington metropolitan area. Ms. Caldwell, I want to thank you for being before this subcommittee. It is the policy of the Committee on Oversight and Government Reform to swear in all witnesses before they testify, and I would ask that you please rise and raise your hand. Do you solemnly swear to tell the truth, the whole truth, and nothing but the truth?
I do.
Thank you. Let the record reflect that the witness answered in the affirmative. Ms. Caldwell, I ask that you give a brief summary of your testimony. Please try to keep that summary under 5 minutes in duration. Your complete written statement will be included in the hearing record, and I ask that you proceed.
Well, Chairman Kucinich, Ranking Member Jordan, thank you for the opportunity to testify today about the Treasury Department's comprehensive initiatives to stabilize the U.S. housing market. It has been 1 year since the launch of Making Home Affordable, of which the Home Affordable Modification Program, or HAMP, is a key component. Today, HAMP is making significant progress with over 1 million trial modifications started. Yet, we recognize that challenges remain. We continue to monitor and update program guidelines to improve implementation and help more homeowners. At the end of January, nearly 1 million homeowners were in active trial or permanent modifications. More than 116,000 homeowners now have permanent modifications, nearly doubling the number from December. An additional 76,000 permanent modifications have been offered and are waiting only for the borrower's signature. Homeowners in modifications are achieving significant savings on their mortgage payments, over $500 per month on average. And HAMP has proven that it is helping homeowners who have faced real financial hardship. Nearly 60% of borrowers in permanent modifications have faced a reduction in income, including loss of wages or hours, or unemployment of a spouse. But it's important to remember that HAMP is just one part of the administration's broader effort to stabilize the housing market. Together, the Treasury and the Federal Reserve have purchased over $1 trillion in agency mortgage-backed securities, helping to keep interest rates at historic lows. Millions of Americans have been able to refinance their mortgages into lower-rate, 30-year fixed-rate mortgages, saving an average of $1,500 per year on a refinance. And thanks to the recently extended first-time homebuyer tax credit, more Americans are now able to re-enter the housing market and stem the slide in home values. Through HUD's Neighborhood Stabilization Program, hundreds of communities across the country are taking important steps to restore and maintain properties in neighborhoods that have been hardest hit by concentrated foreclosures and home price declines. Finally, the administration last Friday announced that it will allocate $1.5 billion to work with state housing finance agencies to help address the foreclosure problems in the 5 states that have been the hardest hit by the aftermath of the burst of the housing bubble, as measured by housing prices. Eligible housing finance agencies may use the funding on a number of homeowner support programs, including programs for unemployed borrowers, for reducing the burden of negative equity, or for addressing challenges that arise from second liens. And while there are still significant risks, we are seeing some signs of emerging stability. Inventories continue to fall. House prices measured on a year-over-year basis are declining less rapidly, with some house price measures posting increases in recent months. Data released by the Mortgage Bankers Association on February 19th show that the 30-day delinquency rates on 1 to 4 unit residential mortgages fell in the first quarter, along with a number of new foreclosures started. Going forward, we recognize that there are still a number of challenges ahead. The permanent modification conversion campaign in December and January yielded valuable insights for program improvements. We've made a number of program changes to improve implementation. For example, at the end of January, Treasury released guidance which requires greater income documentation prior to beginning a trial modification. A simple and standard package of documents will be required prior to the servicer's evaluation of the borrower for a trial modification. We took these steps to speed up the process of conversions from trial to permanent modifications in the future. This new upfront documentation will be required for all new HAMP modifications that become effective after June 1st, although mortgage servicers may implement it sooner. And we continue to make more changes to improve implementation. One important improvement we are working on now is protections for homeowners to ensure that modification process treats borrowers fairly. Treasury anticipates releasing guidance soon, which will include a set of improved protections for homeowners in the HAMP mortgage modification program. Notably, the package will standardize outreach required for homeowners who fall behind in their mortgages and make an offer to include them in HAMP if they qualify. Additionally, we recognize that the foreclosure process is often confusing to homeowners already in distress, and we have been regularly reviewing guidelines around the process as part of our ongoing commitment to ensuring transparency and maximizing program effectiveness. HAMP has made great progress in its first year. We look forward to working with you to enhance the program's performance and to help keep American families in their homes. Thank you.
Thank you very much, Ms. Caldwell, for your testimony. Last week, the administration announced a $1.5 billion program to help 5 states deal with the foreclosure crisis. But in designing that program, you excluded a number of hard-hit, long-suffering states such as Ohio, Pennsylvania, Texas, to name just a few. I have here a letter from a dozen members of the Ohio delegation. It's a letter that was circulated by myself and Congressman LaTourette, signed by Democrats and Republicans alike, demanding to know how you could possibly justify the exclusion of Ohio from any foreclosure initiative. And I ask for your answer now before this subcommittee.
Well, first, let me say, having testified in your district in Cleveland a few months ago, we really understand that there are residents suffering in the state of Ohio and in Cleveland in particular. And I think it's important to also set the context that HAMP and the programs announced last week are just one part of the broader administration's efforts to stabilize housing. And Ohio was the recipient of over $145 million in neighborhood stabilization grants, including $40 million in Cuyahoga County to deal with the very real foreclosure processes that were in place that before HAMP was even started. But I think stepping back to the announcement last week, as Representative Cummings said, negative equity is a severe problem and we had to start somewhere. And so we looked at those markets that had price declines of over 20% based on the peak to trough. And those markets are the markets that are going to be the target of this particular program.
Well, you know, I note that in looking at the states that you chose, all but one of the states in that new initiative are so-called sun states. I know they've been hit hard, but they don't have a monopoly on the pain caused by the foreclosure crisis and predatory lending. What assurance can you give this committee that future administration initiatives will not similarly focus primarily on the sun states to the exclusion of the hard-hit Midwestern states like Ohio?
Mr. Chairman, I think it's very important to understand that we have a broad array of initiatives, and while this particular one was focused on those states that had very high rapid price declines on purchased homes. Every day we are studying the problems facing homeownership in American families and continue to iterate our programs to address those needs.
When you make a major public unveiling of this kind of initiative, and Ohio, where we in particular in the Cleveland area are acutely aware of the kind of help that other areas are getting, and we're standing there with massive amounts of massive areas that have been foreclosed, and some of which unfortunately have been abandoned. Your explanation, well, that's your explanation, is not really acceptable, because when you have these initiatives, you're still setting priorities. That's the message you're sending out. And you're going to have to do better. You're going to have to be able to come back to those of us who are in the Midwest and come up with, some specific programs. Not, we appreciate the neighborhood stabilization. That's fine. That's $145 million. Now you're talking about a $1.5 billion program you announced. We know the difference. And Ohio is, in our area is the epicenter of the subprime meltdown. That's not the only problem, but I'm going to, I have one more question here. Banks and investors are holding millions of mortgages that are not worth anything near their paper value. The value of the houses that secure this debt has fallen to just a fraction. These bankers and investors have no hope to ever recoup their investment. But even after they get a taxpayer's bailout, these bankers and investors refuse to write down the losses. So far, the government hasn't seemed willing to ask the bankers and investors to pay their fair share. HAMP hasn't resulted in many principal reductions. Now, the American people are wondering, is it the political influence of the very banks and investors that taxpayers bailed out that is causing you to avoid taking the necessary step of promoting principal reduction in the Federal response to the foreclosure crisis? And when is the administration going to roll out a real program for getting principal reduction? Ms. Caldwell.
Mr. Chairman, we continue to think about principal reduction and the challenge facing real American families who wake up every day and realize that the value of the largest asset that they have is below what they owe in the house. So we have continued to study how we can make negative equity and principal reduction work better for HAMP. Currently, the program allows lenders to take principal reduction at any point in time in the modification, but one of the things that we've learned is most of the people who are underwater on their mortgage default after they've had an employment shock or income shock. And so this program was designed to target that affordability payment and keep them in their homes, recognizing that we continue to put pressure on the financial institutions to sign up for our second lien program so that we can have more principal write down on the second liens and continue to have more on the first.
I'm going to ask the committee to just indulge me in a quick follow-up. So what's stopping Treasury from writing down the principal of those loans and thereby giving the borrower a more affordable mortgage?
I think as we step back and look at HAMP, I think it's important to remember that when this program was started, we were looking at a crisis of epic proportion and a mortgage industry and a program that was largely voluntary, where there were mortgages, there were servicers, there were investors, and there were banks. And while many people look at the place where they write their check and they see the name of the bank and they think that's where their mortgage is, when their mortgage in fact has been sold to an investor. And one of the things that this program has done over the last year is brought together banks, borrowers, servicers, and investors to reshape a mortgage modification industry that last year was just about collecting payments. This is about keeping people in their homes with affordable payments. And I think the next stage is to look at how we can enhance the program to continue to address the challenges as we go forward.
Thank you, Ms. Caldwell. Chair recognizes Mr. Jordan.
Thank you, Mr. Chairman. Ms. Caldwell, thank you again for being with us second time. In your testimony, you say in 1 year, HAMP has made significant progress. The numbers we have as of the end of last month, January 31st, 2010, HAMP had achieved just over 116,000 permanent mortgage modifications. Again, the stated goal being 3 to 4 million. So I guess my question is that really significant progress?
Member Jordan, I think it's important as we step back and look at the program goals. The program was set out to provide an opportunity for 3 to 4 million homeowners to have a chance at a mortgage modification from program inception, which was a year ago, through the end of 2012. In its first year, we have 1 million homeowners in trial modifications.
Well,
and in those trial modifications, they are realizing close to a 40% reduction in their monthly payment.
Let me ask you this. Do you expect by 2012 to have 3 to 4 million homeowners in a permanent status? I mean, trial is one thing, but I mean, that's your term, trial modification. So trial is not there; it's trial. So do you expect it to get to the goal, the stated goal, right from the outset, 3 to 4 million? Do you expect to get to that number in 2 years, based on the fact only 116,000 are there today after 1 year?
Well, again, just to re-clarify the goal, I think first let me just say we have never seen a mortgage crisis at this proportion. So it's too soon 1 year in the program to talk about what will happen 2 years out. But the program was designed to offer 3 to 4 million homeowners an opportunity for a mortgage modification, and not a permanent modification, an opportunity. And 1 year in, we have 1 million homeowners saving $500 a month in a modification.
I mean, I come back, and I'm sure you're working hard, and I just question this whole idea that the big federal government can do these kind of things. They come out with the promise, we're gonna do a stimulus plan. It's going to keep unemployment 8%. We're going to do a home modification program. We're going to help 3 or 4 million people, and we've done 116,000 in 1 year. But we're going to get to 4 million. We promise by 2012. I mean, do you, yes or no, do you think by 2012, 2 years from today, you will have 3 to 4 million people in a permanent modification plan?
I'll just say again, we're 1 year into a mortgage modification program that is at a scale that has never been done in history, and it's really too soon to predict what will happen in 2012.
Okay. Let me move to the second one. Let's go to the transparency issue, if I could, Mr. Chairman. And if I run out of time, I'll wait till the second round. Let's go to, can we put up slide 1, I think. This is the number of requests. And I guess my question is going to go to, they're going to be hard to see. Let me just cut right to the chase. Why did you decide to quit, if I understand, in July of last year, August, September, October, November, every month on your website you were putting up the number of requests for financial information. And here the last 2 months you've decided not to display that number. Is there a reason why you've decided not to put that number up? And if you had continued the practice you started with, what would the number be today?
Well, first of all, let me just emphasize that since its inception, the HAMP program has been focused on affordability, stability, and transparency. And so we are very committed to transparency of the program.
But you admit that you're no longer putting that
correct.
Piece
the
of
number
information
that
up.
you are referencing there was removed because it was confusing to the public. Just to clarify, the number is the number of requests for information that lenders send or servicers send to their entire portfolio of 60-day delinquent borrowers. It's not a measure that has anything to do with applications to HAMP or the Making Home Affordable program. That's just a measure of solicitations or inquiries on any modification. And many people were confusing it with HAMP, and so we removed it because it was causing confusion in the report.
I mean, you've heard from taxpayers, you've heard from American citizens that it was confusing, or you just decided that it was confusing?
We heard from a number of people on conference calls, on Hill visits and press visits, But if it's an important number to the public, we'll put it back in. If, to your question on what would it be today, it's about 3.5 million.
So it's up, so you'll make a commitment to put that number back up there?
We will, but with more clarity that it relates to overall solicitations, not just HAMP.
I think that's a good thing. You know, transparency is transparency. The American people are smart people. They put Kucinich and Jordan in Congress. No, I'm kidding. They can figure it out. So I think that's something that should be up there. Thank you, Mr. Chairman.
Thank you.
I thank the gentleman. Chair recognizes gentleman from Maryland, Mr. Cummings. You may proceed.
Thank you very much, Mr. Caldwell. What does the average trial modification, what's the savings for the borrower in a trial modification, and is that different than the savings in the permanent?
In terms of the data collection, we don't have exact data on the savings in a trial modification, but if there's been no change in the borrower's income, it should be the same. And so our population has a median savings of just over $500 per month.
So in other words, when they negotiate the trial, if their income doesn't change when they move to that date that would make them permanent, then you would assume it's pretty much the same.
Right, because it's based on affordability, on 31% debt to income.
It was reported in the press on Monday that Treasury plans to implement changes to HAMP, including a prohibition against lenders filing foreclosures while a borrower is in the modification process. Are you familiar with that, right?
I'm familiar, yeah.
And I'm very pleased about that because I cannot tell you how many people at my event on Saturday and the two previous events that we had said that their lender went ahead with filing foreclosure while they were in the process. If you could, please run down other changes to HAMP that are being considered. Are there other things that are being considered?
Well, let me just first back up to the changes that you referenced that were mentioned in the paper earlier this week. Those have not been confirmed or approved. Those are changes under discussion. And as a program that has multiple stakeholders, those were changes that are being recommended, considered, and were being vetted with stakeholders and that were leaked to the press in advance of approval. And I think everyone in this room has experienced an advance leak. So that certainly is along the lines of what is being considered, but it is not yet finalized. In terms of...
Let me just ask you real quick, and what would be the process for finalizing those things that have been leaked to the press?
Full approval within Treasury.
All right. And
but let me go on to say, just in terms of future iterations to the program, every single day my office is looking at the homeowner experience in this program and what we can do to make it better. And so we have continually made adaptations, and we will continue to iterate until we're doing the service that we need to have to American homeowners.
Tell me about the sense of urgency with regard to the one change that we just talked about with regard to not putting people out while they are trying to modify.
Well, let me just be clear at the front. The HAMP current guidelines prohibit a home from going to foreclosure sale while the homeowner is in a HAMP trial modification. And so these changes are designed to enhance the communications so that homeowners have a clear understanding of their rights and that they know that their home cannot go to sale while they are in a HAMP modification.
I see.
That has been the case since the program was started.
And how important is it that you have cooperation of the lender or servicer in the HAMP program?
It's very important. HAMP is a voluntary program, but I think it's important once a servicer signs up for HAMP, they are under contract with U.S. Treasury and they must perform. You know, when the program was launched a year ago, Folks said you'll never get servicers to sign up to modify mortgages. Within the first year, we went from 0 servicers to 100 servicers, covering 90% of U.S. mortgages. And so while it is a voluntary program, once someone is in, they are under contract and they must comply with the regulations.
And that leads me to the question, you know, in my district, you heard what I said a little earlier. I mean, we work very hard to put lenders together with borrowers, and the #1 complaint is that the borrower can't get a hold of anybody in the lender's office. I don't care who it is. I mean, we dealt with 25. We had them all in one place this weekend, past weekend before last. And so I'm trying to figure out where the problem is here. There's a disconnect. You follow me? And I'm sure this is happening all over the country, and that's the #1 complaint. And I can get 1,000 people out on a Saturday morning in the snow. I'm serious. But they can't get a lender, and the reason why they come to me, and they shouldn't have to have a congressman to facilitate them, you know. So I'm just trying to figure out, I mean, you just said that you all are trying to make sure that you try to address all the issues, because I know you want to be as effective and efficient as you can be, and I just wondering if there's anything that we're missing here.
Well, let me first say that homeowner events like the one you held last weekend are very important. I was actually supposed to speak at the one when it was originally scheduled for the first part of February when we had the big snow. And so those are very important. I happened to be at a similar event that our office was hosting in Houston, Texas, and that opportunity for face-to-face connection with the servicer is important. But I think it's important to remember a year ago, servicers were just in the business of collecting checks, making phone calls, and foreclosing. And as part of this crisis, they have had to fundamentally reshape their operations to handle homeowners in crisis, to follow the rules of a government program, to shift modifications from those that used to increase a homeowner's payment to those that are long-term and sustainable. And so as they have ramped up, there have been some implementation challenges. Some signed up before they were ready. Some are doing better than others. And part of our commitment to transparency is publishing a monthly servicer performance report so that we can judge who's getting the job done and who's not.
Thank you. The gentleman's time has expired. Chair recognizes Ms. Kaptur.
Thank you, Mr. Chairman, for holding these hearings. Welcome, Ms. Caldwell. Could you please, for the record, state at which institution you first began as a mortgage loan officer?
I have never been a mortgage loan officer, so.
Thank you. Have you ever, in your prior positions, handled the assets and liabilities of a financial institution and how they actually account for the value of real estate?
Yes, ma'am, I have.
Okay, and for which institution was that?
With Bank of America.
Bank of America. Have you ever been a part of the resolution of an institution or any instrumentality of Bank of America as they tried to work out on the books of that institution troubled real estate loans?
Yes.
And have you been a part of an effort to mark the value of those assets to market for those institutions on their own books?
Certain asset classes are required to market and certain aren't. So it really depends on the accounting rules with the various assets that I've been a part of.
I am trying to understand. Now, you're over at the Treasury Building, right?
Correct.
You're over at the Treasury Building. I have found this whole approach to dealing with the housing market foreign to anything I have ever known. And in a way, I think you have a job that's doomed to failure. And I don't understand why the last administration and this administration are using these means to deal with the real estate implosion in this country. So some of my questions And I asked Secretary Geithner yesterday to come and see the people over in the administration who are involved in these programs. Because I can't figure out if Treasury has been selected to try to dig out of this avalanche of troubled loans, because the system can't find the loans on the books of the institutions that originated them and then sold them upstream. Or if they're doing it for some other reason that I don't really understand. But what's been happening in communities like my own, foreclosures are going up and not down. Home values are going down, not up. Credit is frozen across this country because the banking system doesn't have confidence that the regulators or those in charge of regulating the financial institutions of this country have any consistency in what they are doing. And so this recent decision by TARP, the group that decided that Merrill Lynch would be merged but Lehman would go down, now the same instrumentality has decided that 5 states are going to get TARP money to deal with home foreclosures, but 45 other states aren't. And I can tell you I represent a district where the unemployment rate in the 4 counties I represent are higher than the unemployment rates of the states of Nevada and California and Florida and the other states that were selected. So it's really, I'm thinking, so Treasury now picked 5, but it didn't pick troubled areas of the other 4. It makes no sense to me. And I'm wondering why the FDIC and the SEC aren't being used to deal with home value in a normal manner so that the books are resolved to the institutions that have held these loans, but rather all this is being thrust at you at Treasury, which is not a housing agency. It never has been. It's a bonding agency. It sells bonds, it collects taxes, that's what it does. The real housing knowledge is inside of HUD, it's inside of FDIC because those loans are on the books of the institutions that made the loans, and it's over at the SEC. So we're not resolving the, in fact, what we're doing, what's happening is the approach is pro-cyclical. What's being done to date is driving us into further recession, less lending, and more delinquencies. And I can tell you, I mean, I'm not the only one up here, in the HAMP program, it's not working. As hard as you try, they've given you an impossible job. And to resolve what's wrong with the housing market, I asked Secretary Geithner for a meeting, and I guess he's agreed to do it. He's not a houser. Hasn't been involved in real estate. This is really complicated. We need to use the proper regulatory instruments, and we're not using them. And it's beyond me why, unless we can't find the loans. Unless they're missing somewhere, and we can't, and I don't believe that. I think that we can resolve them on the books. So I guess rather than giving you all the troubled real estate loans in the country, what I think should be happening is every single institution that made those loans, we should be resolving and taking those losses, writing down the principal on those assets and liabilities on the books of those banks. That's what bank examiners do. That's what the FDIC does. So my fundamental question is, why aren't we doing that?
The witness will have time to give a brief response.
Let me just say for the HAMP program, which is what my team does every single day, when you look at the mortgage structure that we have today, over 90% of the mortgages in the United States are serviced by HAMP-eligible servicers. And that happened from within its first year of operations. We have 1 million homeowners that are saving 40% a month on their mortgage payment. And this is only one piece of the administration's overall housing solution. When you think about interest rates, you think about refinance, you think about the purchase of mortgage-backed securities, so there are and you think about HUD neighborhood stabilization funds, there are a number of agencies working together to address what is the largest housing crisis of our time.
We're going to go to Mr. Tierney, Massachusetts. Then we're going to have one more round, Ms. Caldwell, because myself, Mr. Jordan, and perhaps other members have some additional questions. What about Ohio? Tell me, what are you going to do? What are you going to do for Cleveland? You got to do more. What are you going to do?
Well, I think it's important to keep in mind that right now there are over 22,000 homeowners in trial modifications in the state of Ohio, and our job, number one, is to get those homeowners into permanent modifications. And so we are focused on that every day.
Don't you have about 19.4% of people in Ohio that are already underwater?
I don't know the underwater statistics for Ohio, but we continue to look at everything we can do in Ohio and across the United States to keep homes, to keep those people in their homes.
Okay. It's not good enough. You're going to have to do more. We'll be in conversation about these things, but I'm not satisfied. Listen to what Mr. Rokakis has to say in the next panel, because he has some of the granular details about what's going on in Cleveland, Cuyahoga County. I'm sure you're doing your best, but this is a wake-up call, and consider it a friendly wake-up call. I'm concerned that you haven't done enough to pressure the loan servicers and investors, and all the effort put into this program will not make a meaningful difference for the large number of homeowners in America who need help. That is the underwater borrowers, the borrowers who do not get modifications because of conflict of interest by the lenders owning both the first and second mortgages. Four biggest banks control 2/3 of all loan servicing. What is Treasury doing to address this problem?
We're doing a number of things. I think and transparency is key here. Beginning in November, with our data published in December, we published servicer by servicer performance reports, and that is a big motivating tool in getting those modifications made and converted. In addition, we've hired Making Home Affordable Compliance. It's a separate unit of Freddie Mac that goes in and inspects all of the major servicers to make sure that they are appropriately soliciting homeowners that are eligible for HAMP modifications and that they're doing it in the appropriate way. And third, we run a call center in partnership with Hope Now and NeighborWorks to make sure that we are providing homeowners across America an opportunity to get help on their loan and get referred to a counselor where needed.
I've looked at your testimony, all of it, and it touts the accomplishments of the HAMP program, but it's hard not to conclude that the administration has created a system that's all carrot, no stick. All along, we've heard reports of the poor treatment of borrowers by loan servicers. Counselors in foreclosure prevention programs across the country relayed their stories through the media. And we heard that one of the most common reasons loan servicers deny borrowers modifications is for the alleged reason that the borrower's hardship isn't permanent. What can you tell borrowers who are getting this kind of treatment from loan servicers?
You know, our office and the call centers speak with borrowers every day on the phone. We have been out to 40 cities across the United States, or we've made a commitment to go to 40 cities. We've been to 22 to meet with homeowners in person. We regularly go out into the district offices because we want to hear about the experience that people are having. This program was designed with the borrower at the forefront, and every day this office takes seriously the experience of homeowners across America.
How do people get a hold of you and indicate their experience? You had a website you want them to go to?
We have a website. And
what is that address?
It is makinghomeaffordable.gov, and we have a phone number which I'll have to provide to you, but I know the last four digits are HELP.
We don't want that to be wrong. Okay, well, we will make sure that we work with you in circulating that information. Now, one big complaint among borrower advocates is that loan servicers can proceed with a foreclosure while the borrower is still being evaluated for and is in a trial period for a loan modification. What are you doing to change that?
Well, again, as I said earlier, I think it's important to understand that HAMP guidelines have always said that a home may not be sold, go to foreclosure sale while a borrower is in HAMP. Foreclosure laws do differ across states, and so there are some states where there may be borrowers or homeowners in a foreclosure process, albeit not a sale, while undergoing HAMP. And so one of the things that we are very committed to doing is making sure that homeowners understand that process, that servicers understand their responsibility in the process, and that there are no situations where a homeowner goes through an avoidable foreclosure.
My time, thank you. My time has expired, but I'm going to ask you to be open to submissions by members of this subcommittee of follow-up questions that we may have. I have a follow-up question about underperforming servicers, but I'll put it in writing. We're going to move along with this and get to the second panel after other members have had a chance to ask a second round of questions. Chair recognizes Mr. Jordan. You may proceed for 5 minutes. Thank you.
Thank you, Mr. Chairman. Ms. Caldwell, let me get back to this transparency concern of, for the $75 billion, potentially $75 billion program. The Special Inspector General for TARP has made a recommendation that Treasury should require the servicer to compare the income, it's straight out of their book, compare the income reported on the mortgage modification application with the income reported on the original loan. They list in their latest report that this recommendation has not been implemented. Why hasn't it? That seems to me that we're looking at potential fraud, just a good government type of thing that could happen. Why haven't you done that? Why haven't you required that?
The HAMP program is a modification program, not an origination program, and so this program is designed to prevent avoidable foreclosures. So the focus is on what is the homeowner's current hardship and the documentation of the income that they have today to make sure they can keep an affordable payment.
If I could, Ms. Caldwell, don't you think in light of all that took place a few years ago when we talked about some of these loans that were made and there was maybe no documentation, there was potential fraud, don't you think it makes sense, you as a professional who served in this industry, don't you think it makes sense to look at that, and the guy who's supposed to inspect, the Inspector General of the program, is supposed to watch out for the billions of taxpayer dollars potentially at risk? Why wouldn't you do it? The Inspector General's telling you to do it. It makes sense. It was part of what started us in this mess to begin with a few years back. Seems to me that would be something, oh yeah, no-brainer, let's do it.
Our focus right now in the HAMP program is getting the documentation in from the borrowers currently in trial modifications on their income and the hardships that they're facing today so that they can get converted to permanent modification.
Do you intend to comply
not
with,
on whatever
do you intend at any point over the next 2 years,
ago.
as you're trying to get to this goal of 3 million, 4 million, and you've only done 116,000, do you intend at any point over the next 2 years to do what the Inspector General has asked you to do?
We're always looking at ways to iterate and improve the program to provide a better experience for the borrower and for the taxpayer. Right now we're focused on the conversion from trial modifications to permanent modifications, but we continue to look at the program.
Is that a no? You're not going to do what the Inspector General suggests you do?
It is I can't say today, 1 year into the program, what we're going to do between now and 2012. But I can commit that we continue to review it.
What's the qualification rate? 1 million people have applied and are in trial modification. What 116? What do you know the percentage of folks? And do you anticipate those who are still in trial modification? What percentage of those are going to make it into permanent modification of their loan? Are the vast majority going to continue to be rejected? Is that your? Is that? I mean, that's the history. You anticipate that being the case as we move forward?
In terms of a conversion ratio, it is too early to predict what the long-term conversion ratio can be. The one prediction that I would be prepared to say is that when documentation is required up front, the conversion ratio will be higher because the documentation collection has been a challenge. I do think it's important to just again emphasize that the program is designed to provide 3 to 4 million an opportunity for a modification not a commitment to modify
Okay.
3 to 4 million
Well,
mortgages.
let me ask, it looks like a high number are going to be in trial and not make it to the permanent. With that fact in mind, if homeowners who get trial modifications but don't qualify for permanent ones end up defaulting on their mortgages, wouldn't it have been better for them to pursue some other type of approach, some other type of remedy for the difficult economic situation they're in?
Well, I think it's important to remember that HAMP is a pay-for-success program, so incentives do not get paid to the servicer until the loan becomes permanent, and then there are incentive payments as the loan stays current over a 5-year period. So to the extent that a loan does redefault, taxpayer money is not paid to support that loan. In terms of keeping homeowners in their home and avoiding foreclosure for a longer period of time, I think that is a good outcome.
Let me ask one final question, if I could, Mr. Chairman. This is from a week or two ago, Wall Street Journal piece on the program, the date, February 9th. Former head of Freddie Mac, David Moffett, says he and others warned administration officials that the loan modification goals were unrealistic, that borrowers whose homes weren't worth what they owed were unlikely to take part, and that many participants would be likely to redefault within months. Quote, they didn't want our views, Mr. Moffett says. Looks like he was somewhat, visionary or prophetic on his statement there. Is that statement accurate in your mind, Ms. Caldwell? And were, in fact, those of you at Treasury, I don't know if you were there quite yet, but do you know if folks at Treasury were warned about, got this warning that Mr. Moffett states in the article?
You're correct. I joined Treasury in November of 2009, so I can't speak to what people were thinking at Treasury. But what I can say is that in the program today, we have over 2/3 of homeowners current on their mortgage, and we've never had anything at this scale, so we don't have historical data to fall back on. But what we do know in loss mitigation prior to this crisis, close to 45 to 50% redefaulted. So we are outperforming in terms of prior history.
Mr. Chairman, if I could, if you have another hearing, I don't know if you're going to, but if you do, we may want to get Mr. Moffett.
I have a feeling that we're about to become good friends here.
Mr. Moffett may be someone we want in front of the committee. Thank you.
Thank you very much. Chair recognizes Mr. Cummings.
I thought Mr. Tierney was.
Mr. Tierney waved on the last round, but if
All right. No.
I would be happy to begin with Mr. Tierney.
I'll yield to Mr. Tierney.
Okay, Mr. Tierney.
Thank you. I apologize for missing your remarks in the early part of the questioning, so some of this might be repetitive. I'm sure it probably is, but as long as we're here. Can you tell me why the administration hasn't considered any sort of principal reduction program, or whether it might do that in the future, and what it would look like if it did?
Right now, HAMP currently allows for principal write-down at any point in time in the mortgage modification. I'll also say that
It allows for it, but it doesn't
require it.
naturally move in that direction.
And the administration has been studying ways to look at principal write-down as part of a mortgage modification. But one of the things that we have learned is that the bulk of the people who are underwater in their mortgage are currently paying, and so we're always examining that in the lens of cost to the taxpayer, moral hazard, and keeping the program running. And so with that in mind, this program was designed for affordability to make sure that people could stay in their homes with a payment they could afford.
Now, when you're looking at this new plan to divert about $1.5 billion in TARP funds to just 5 states, will there be a change in attitude with respect to that, since it's TARP money and a lot of those banks that may be involved actually took taxpayer money? Will be requiring a little bit more from them in terms of principal forgiveness?
Right now, we're looking at this program announced last week. We're trying to get it up and launched and learn from what the local housing finance agencies are doing. And like with everything else that we've done with this kind of crisis that is something we've never seen before in our history, we want to take the lessons that we learned from this and all of our other housing initiatives and try to make our program better.
So that's a no, right?
it's too early to tell. We are all learning through this
Right, but you've
together
not
as
done
we
it in the
go
past, so
along.
there's nothing to learn from the past about doing it because you haven't done it. So I'm asking whether or not you're going to take some consideration and maybe some emphasis on trying something new, particularly where some of the banks involved have already taken the taxpayers' money, and now, say in some instances where it's appropriate, we're going to make a conscious effort to aggressively go and get principal reduction, see if we can get these people to stay in their homes and have these banks do something responsible. Is that not something you're going to go aggressively after? And
Our office has been aggressively considering proposals from on all areas that we can do to address the foreclosure crisis in this country and prevent affordable foreclosures. But as I said earlier, we have to do that with the lens of affordability, stability, and transparency, and we have to think about it with the taxpayer dollars.
all right. Seems to me you have an aversion to that, but we'll see how it develops. Yield back to Mr. Cummings.
Just one real quick question.
Mr. Cummings.
He just yielded back to me, Mr. Chairman. One of the disturbing things that you said that it upsets me tremendously, and I just check with my office to make sure, there are people, I don't care whether it's in law or not, there are people who are being foreclosed upon, whether it's in the law or not. And we can give you name, dates, and serial numbers. And some kind of way, we got to get to that. I mean, apparently there is no enforcement mechanism. That's number one. Number two, in the HAMP program now, by the way. Number two, you seem to make a big deal out of this thing of listing the servicers and how many, what they did. I don't know, I'm trying to figure out, how do you see that as an incentive? Is there any data that shows that they get, they get overjoyed or something when they see their name listed and there are a lot of, they've done a lot of these modifications? Because it doesn't seem to be working.
Public pressure and transparency is one tool, but I think it's also important to remember that HAMP is a pay-for-success program. So if modifications don't convert, servicers don't get paid. And so you get paid for success. In addition, if there are modifications that have not been done appropriately, then under the contract, Treasury can go back and take back that incentive.
So if we have situations where people are doing that, the thing about with the foreclosures while they're working out the HAMP program, we should get that information to you?
Absolutely. If there are cases where you have servicers in your market that have violated the guidelines under HAMP, we want to know about that.
And what will you do?
We then turn that to our compliance agent. We have a compliance committee. They review it. They determine the facts. And then there's a recommendation made about remedies.
Thank you, Mr. Chairman. I yield back.
Thank the gentleman. Chair recognizes the ranking member of the full committee, Mr. Issa.
Thank you, Mr. Chairman. Ranking Member Jordan had asked you about transparency pursuant to the special IG for the TARP, and I don't think he got a satisfactory answer. Do you believe that the American people deserve 100% transparency on your actions and your progress?
I do. As we said, this program has been designed to look at affordability, stability, and transparency.
Okay, well, going to the transparency, since you've only done 116,000 permanent loan modifications, or 3% of your goal, and we're well into your time horizon, how can we see, in a transparent way, your progress so that we can determine whether or not you have any hope of, in a qualified way, in an effective way, achieving anywhere close to your original goal, or if you're not, to take back a substantial portion of the $75 billion, because ultimately, if you're not going to get close to 3 to 4 million in permanent loan modifications, shouldn't we encourage the President to reallocate that money?
Let me answer, I think your first question was about the 3 to 4 million, and it's important to, again, stress, as I did for Member Jordan, that it was not designed to provide a commitment of modifications to 3 to 4 million people, but rather 3 to 4 million homeowners an opportunity for a permanent modification.
Well, let's
so
go
as we
back
come
through.
into the
How
first
much
year,
of the $75 billion have you used with 116,000 permanent loan modifications?
I don't have the exact answer to that, but it's important to
Okay,
remember
well,
that
if
HAMP...
we're going to, ma'am, if we're going to have transparency, then Where can I go and find out how much you've spent in somewhere close to real time? See, this committee wants transparency. We demand it. We're demanding it of the banks. We're demanding of all kinds of institutions we didn't before. If you come before the Congress in a scheduled hearing and you don't have the answer to a question of how much you've spent, then I would like for the record a place where my staff can go on a daily basis from here forward, click on a public site, or if there is a reason for it not to be public, and a less than public site, and get that answer. Can you make that commitment to me today that you will bring us back that answer?
I can bring you back an answer on the amount spent, yes. But I will again say, because the program only pays for permanent modifications, it has not spent much.
Okay. Do you, by the way, receive a tally on a daily basis or as requested immediately of how much has been spent? Is that a question you ask and get answered periodically?
It's a question asked periodically, but not daily.
But when you ask it, how long before you get an answer usually?
It's hard to say.
Well, I mean, just give me one example. I'd be fine. A day, a week, a month, an hour?
Within the time requested, but that it is published.
You're telling me that this is published, that my staff could go during this meeting and get that information?
From the TARP funds, yes, there's financial statements for the TARP.
Well, the special IG basically said, no, there isn't. That's one of the problems, is the accountability and transparency in his report, which is rather lengthy, comes up with a not so good. You know, this is not a B-plus exercise. This is a D-minus exercise in many of the things that he said. Well, let me move on to just maybe one or two other questions. You're now well enough into it with 116,000 modifications. Let me go to a question that was asked before, maybe to set a stage. How many banks did we give money to in the TARP? Not in your program, in the TARP overall. Did we give money to anybody, or did we loan money to them?
In the TARP?
Yes. We loaned money to the banks, right? They paid
Correct.
back with interest, and most have exited. The largest banks have exited.
Most,
so
yes.
when you're going to the banks asking them to do loan modifications, to basically forgive, in some cases, substantial portions of principal, you haven't given them any money. The only money is the money that that you, in fact, are standing there out of your $75 billion. Isn't that correct? That their inducement is whatever you bring with your $75 billion in funds. Is that right?
Well, and enforcement under a contract that they've signed.
If they choose to participate with you.
Of which over 100 servicers have, covering 90% of the mortgages.
Okay.
And the TARP banks servicers have all signed up.
But those are those who chose. I just wanted to make clear that the gentleman on the other side was implying we gave money and therefore they had an obligation. But the only people who have an obligation are those who signed up for this program, and you're giving them money from the $75 billion. Is that right?
For their performance under the contract, correct.
Very good. Thank you, Mr. Chairman.
Gentleman's time's expired. Chair recognizes Ms. Kaptur.
Thank you. Mr. Chairman, I would appreciate if Ms. Caldwell would answer, do you possess a degree in finance or banking or accounting?
Finance,
Accounting science?
no.
Your degree is in science.
A degree is in finance.
Finance. Thank you very much. According to information that I have, in Ohio, in the past year, 2,529 homeowners got what are called permanent modifications. That doesn't mean that anything actually happened. It just means they went through some process that got them to some point. Of the program that you have responsibility for, the HAMP program, what percent of those individuals that have come to the government of the United States through your program have actually been resolved? All those servicers you said that work or signed up for your program, what percent? Is it 5%, 3%? What's the number for the country?
I'm sorry, can you ask the percentage of what? I didn't understand your question.
Of the home loans that have actually been refinanced and resolved where the people were able to stay in their homes, either through principal reduction, reworking of the mortgage loan, whatever, what percent in your program?
In our program, we, at this point in time, because we have homeowners in a temporary review, at the end of December, we put homeowners in a trial modification to do one more review so that we could make sure that that they understood what documents needed to be in and that they had a chance to become current. So therefore, we have not had very many people declined in order to, so that's not a number we can give you.
You cannot.
Everyone that's still in a trial, unless their property is ineligible for HAMP or they have withdrawn from HAMP, they've not been able to be declined.
Well, according to the numbers that I have, Ohio had about 90,000 homeowners who were foreclosed on in the last year, and of that number, we have 2,529, a very small percentage, who got permanent modification to their mortgage. But when you really probe beneath the surface, that permanent modification doesn't necessarily mean that they remained in their home, because something can change, because it's in the program and something else can happen to it. So my point is, it's a very, very small number of people who've gotten any home security out of this program after 1 year in Ohio. Maybe it's different in other states, I don't really know. But certainly in Ohio, we don't see any kind of real bounce from this program. If it's all right, I would like to state some of the difficulties that we are having in Ohio. The servicers really aren't serious. Participation is voluntary. They can fiddle around with a loan for months. There's no strong arm of FDIC in there or the SEC working with the institutions, which goes back to my original question. It's very curious to me that these mortgage loans are being worked out at Treasury. That's never been the housing. Treasury certainly doesn't do servicing. I mean, it's just an odd place in the government of the United States to conduct these activities. But let me just state for the record a couple of real problems here. The 31% threshold that is used in the program that you manage is unrealistic in regions that have traditional affordable housing stock like Ohio. We didn't have the big bump up like Arizona, and I'm sort of offended. California, you know, all these Arizona, all these places that had hyperinflation, they get attention, and yet, you know, the heartland again gets run over with a Mack truck because the people in our area were paying less than 31% of their income for their mortgage, and the modification process actually increases their payment and exceeds the 31% threshold. So it really works, again, it's just another, it becomes a pro-cyclical means of denying people the ability to work out their mortgage. As you know, there's a huge lack of coordination between the legal, the loss mitigation, the collection, and the home ownership offices of lenders or servicers. Total confusion, loss of documents, and I'll tell you, one of the worst companies is Bank of America. We get so many complaints about Bank of America, your former firm, and documents are constantly being lost, and I just wonder what you think, Ms. Caldwell.
I'd ask unanimous consent that the gentlelady have an additional minute.
The gentlelady's time has expired. There's a unanimous consent to give her another minute. You can ask, if you could ask a question, we'll ask Ms. Caldwell to respond.
I thank the chairman and I thank the ranking member. I want to know what you can do to get the servicers to really do their job.
No, I think it's, again, as I stated earlier, this program went from startup to 1 million homeowners in trial in a year and 0 to 100 servicers in the first year. And we have acknowledged there have been implementation challenges as this industry fundamentally restructured. And so we continue every day to learn from what's happened in the prior month to make improvements. Now, when you talk about permanent modifications, we started the month of December with 31,000 modifications. In fact, when I testified for the Chairman and the Ranking Member, a few months ago we had 31,000 modifications. Through daily efforts with the servicers, setting goals, improving processes, we now have 116,000 modifications. That's in 2 months, with another 76,000 out the door awaiting signatures.
Could you define what modification really means?
Permanent modifications, where a homeowner has been through a trial and converted to permanent modification. So that's been a doubling of pace in the last 60 days, and that's a result of just growing into the system and learning from the startup process.
If there's a third round, Mr. Chairman, I'll continue my questioning.
Uh,
on
The
what the
gentlelady's time has
definition of that
expired.
means.
This is the end of the second round of questions. We've got 3 panels, and we're going to need to move on. To my colleague, Congresswoman Capter, Ms. Caldwell has consented to answering any questions that can be put in writing, and we'll make those, if we get a timely response, part of this. As has been pointed out by my colleague, SIGTARP has said that the American people deserve better. Ms. Caldwell, I hope that you will agree. Thank you very much for being here.